Well, gold price is getting slaughtered right now. It's down to 1338. It's down like 22.50 for the day so far. Silver is 25.25. That's off 28 cents. Apparently, South Korea raised an interest rate last night, quarter point, and it sent the market reeling a little bit. And add to that they also, I just read here this morning that the margin on the Comex is going to be raised for gold and silver, platinum and palladium. So all these things are coming together at one time, and it's really dragging down the market, dragging down the price of gold and silver. So, and that coupled with the renewed rumor again, because of South Korea raised their interest rate, that China is going to raise their interest rate. So it looks like at least over the next few days, whatever, we're going to have a couple down days. But once again, the Fed is still printing money. There doesn't seem to be any kind of monetary policy change here in America. You have Ireland getting about in bailout talks with the EU. I read something real quick this morning about it was Greece or Spain. So I mean, everybody, the debt situation is still there. Not the real underlying problems in the financial markets haven't changed at all, and none of the problems have been solved by any of the quantitative easing, as they're calling it. And so this next round of quantitative easing isn't gonna relieve any pressures that are out there in the financial markets at all. And as far as America goes, all the money that's being spent and put into the markets, I mean, there isn't anything really made in America anymore. So if there's any spending increase, it's going to benefit foreign economies anyway. So as far as the American market goes, I think we're kind of stuck, as we all already know that. And the Fed hasn't changed their tune. They're still printing. They're still going to be buying bonds. So it's going to be a rocky road for the next few days. But I think the long-term fundamentals are the same. They're printing money. There's still demand on the silver side for both investment and industrial. And if you look at where China's at, as their economy keeps growing and more of their citizens come online, they're going to be using more cell phones, more laptops. They're going to be building more railways, more highways. And as another article I read this morning pointed out, that in the 1950s, when America rebuilt its highway infrastructure, it consumed over half of the world's commodities to do it. So there's a big commodity boom still on the way for China as far as metals, and obviously the stories have been out about China encouraging their citizens to invest in silver and in gold. And as more of their citizens earn higher wages, the more they're going to buy silver and gold as an investment to save their money. And because one thing the Chinese people do is save their money. They save 35% of their money, where we in America, we spend all our money. So you can bet that they're going to be buying more and more of it as time goes on. So nothing's changed. The rate hikes were spooking people, and that's to be expected. The Comex raising the margin price is also spooking people. But hey, it's an opportunity for us who want to accumulate metals at a lower price to do so. So that's the way I'm looking at it, and that's how I'm moving forward. That's what I think. If you think something different, please leave a comment below.